Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, March 17th, 2016. Well, we got to take a look at the spiders here, guys. This is the spiders, the SPY, which again mirrors the S&P 500. The reason why we got to focus in on it is because you broke above a major level today. Now, most people would get very, very bullish. I want to see if this move has teeth, meaning do we confirm tomorrow? The reason I say that is because this is a very short-term extended market. I mean, if you look at where we were at 181, folks, basically a month ago, right? We're in mid-March now, and in mid-February, here's mid-February, we were at 181. So 205, let me calculate that out, actually. So 205, let me do that, minus 181 divided by 181 gives you a 16.7% move on the SPY. And that's in 1 month. That's incredible, folks. That is incredible. So incredible that it's not that far off from the 215 highs where we're the all-time highs on the spiders back here. So we'll have to see again how that plays out. This is going to be extremely, and I repeat, extremely interesting over the next day or so. I kind of partially believe that today's kind of price action of them floating the markets up is just to really put the pain to the options expiration people who have bought puts on this market. So again, if you think about how many puts probably have been bought because the market is overbought, there's got to be a ton. So the institutions don't want to let the market down. They want to make all that premium for themselves, not giving anything away. And by pushing the markets up even more, they're just increasing their profits. So that could be what's going on here. We'll know basically on Monday, right? So Monday we come back. Options X is Friday. So at Friday things will end. That whole aspect will end. And then Monday we'll start up and see what this market has in store. So again, we'll have to see how it goes. But believe it or not, I mean, I'm even a little surprised at the relative strength today. Not up a ton. I mean, we're up $1.50 on the spiders, 0.75%. But it's still more than anything to me. It's the ability to push through this gap fill right here. This is a major gap fill. Now, if the markets do continue up, let's talk levels, right? So if the markets continue up, see this level here, pivot, 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 and pivot, all coming right into this area. The next major target for this market would be about 210, maybe 209, 210. So, I mean, it's pretty crazy. It's not a ton up. I mean, it's another 4 to 5 points up, but that would be your next target. And again, all you're doing there, folks, just let me show you again. You're connecting these highs right through, which gives us this area up here. This lower one's a little bit of resistance, but it's not the major one. The major one's going to be right up here, which again is just underneath 210. Okay, so again, what's driving this market? It's the relief from the Federal Reserve yesterday, the Fed basically being as dovish as ever. Probably, I mean, they were one step away from doing more QE yesterday. That's the aspect that a lot of people came away with. Pretty spectacular, really. I was even surprised. You know, if you listen to the Q&A with Janet Yellen, she was ridiculously dovish, not even answering forthright any questions about when they're going to raise interest rates, what they have to see. It used to be when unemployment was 5% or so, and inflation was, 2%. Well, we basically achieved both of those in the recent months, and here we are. And she didn't even give any idea on when they were going to raise interest rates. She didn't even say next meeting or if anything improved. She just said, we'll see. And so that is, that's about as dovish as a Fed can be. Honestly, I think her hands are tied. And the market doesn't take this as a negative right now, but I think eventually it will. But at this stage of the game, think about it like this. The ECB dropped their interest rate. They also flooded more money. So, the only way the dollar can keep pace with the euro is by the Fed being super dovish. And if you look at the UUP, take a look at this, guys. This is incredible. Look at the drop in the last 2 days. We were basically hovering here on the UUP, which is the dollar ETF at 25.16, and we're now trading all the way down here at 24.5. It might not look like a huge move, but for a currency, that is a monstrous, I repeat, monstrous move. Insane move, actually. Okay, so we'll have to see again how things play out, but right now we're just watching this market in float mode. Volume is only 71.7 million today too, so very, very light volume on this market. Oil's continued to rally, although I think actually oil topped out today, or very close to topping out. If we go to the USO, take a look at this, guys. The USO up about 3.5%, and if we go to the intraday chart on the USO, you can see it's holding up pretty well, but we hit a major level, which was the $40 level. So my max target here on oil was $40. 38 was a target, and I said to our members it could pierce 38 and touch 40. Well, guess what? It touched 40 today. So tomorrow I want to watch to see, does oil stall out? Do we see any sort of pause day and then a reversal next week? Same thing with the markets. We really do seem to be seeing that the markets are trading with oil as well. Oil having a good day, therefore energy stocks are doing well. Chevron's up $2, Exxon's up $1.50, and the markets seem to be reacting positively to that as well. So it's the Fed plus energy keeping the perfect storm going here for this market. All right, guys, come join us here at InTheMoneyStocks.com. Lots of trade opportunities here over the last few days. The money will be flowing starting next week. That is the prediction. That is the truth. Enjoy. Come join us. Take the 7-day free trial.